Well, I think there are some pretty common elements across Europe, and I define Europe geographically and not in any other sense, so together, because we've been hit by some pretty common shocks. Obviously, sadly, the Ukrainian war being the biggest one. And so I think we're seeing a fairly common pattern now that the big shocks of last year and a bit before that are now unwinding. So certainly we see in the UK inflation coming down. I mean, it's not come down yet as much as in the euro area, but I expect the next read to be quite a bit lower because we have a particular pattern of energy support measures, which means it adjusts every quarter really, and the next one is the quarterly adjustment, and I expect quite a fall in the next figure because that's, I say, sort of somewhat baked into the annual comparison. However, as we stressed in our report last week, of course our job is to get it back to the target. The target is 2%. I expect it to be quite a bit lower by the end of this year, but it's not going to be down to 2% by the end of this year. And policy has to do the second half, to sort of continue with the rugby analogy for a minute. The second half is not going to be about unwinding shocks, it's going to be about policy. And policy is, we think, now restrictive. We can see that. Yeah, we've got a very subdued growth forecast for the UK. We're not forecasting a recession, but it's very subdued. It's pretty flat. We are seeing policy being restrictive. And the basic, to be clear, the basic message we're giving on policy, and we were very clear again last week when we once again held rates at 5.25%, is that we believe that policy will need to be restrictive for an extended period of time. There are still some upside risks on policy. I mean, the terrible events in the Middle East, they are terrible in their own right. They haven't actually so far caused a rise in particularly in the oil price, but it is obviously a risk. So there are upside risks there. And I'll just make one final point. It is too early, and I think this is common where you look at the Fed minutes, you look at the ECB, you look at us. It's really too early to be talking about cutting rates. The market, of course, will reach a view. It has to reach a view on the future path of interest rates. Totally understand that. But we are very clear. We're not talking about that. What we're saying is policy is going to have to be restrictive for an extended period to see the second half out, which is where policy is going to have to do the work to bring inflation back to 2%. And I believe it's going to happen. I mean, our forecast suggests we will be back at the target in around a 2-year horizon. I'm optimistic. I think it will happen. But I'm afraid we've got to continue doing the work to make it happen.